What's going on, everyone? I hope you all had a nice and relaxing weekend because we have another exciting week ahead of us. The market did pretty well on Friday, and around 52% of stocks in the S&P 500 finished in the green. And what you'll notice is that the big tech stocks like Google, Nvidia, Amazon, and others really carried the market. And we do have an especially big week for big tech as we have some powerhouse earnings set to release. Amazon, AMD, Apple, Coinbase, DraftKings, and a whole bunch of other ones are set to report this week. And on top of that, the big man, Jerome Powell, is coming back with another crucial interest rate decision. So I hope you guys are ready. We are set for a especially crazy week. So let's get right into it, Tom.
Yeah, last week was insane. We saw Microsoft and Google, or Alphabet, both report earnings, and they ended up exploding there Thursday night. And then on Friday, they did kind of taper off a little bit. But I'll tell you what, the overall market did not. It actually closed up 0.95% on the SPY. We did see those good moves up. And this week, all eyes are really going to be on the earnings and on Jerome Powell. Those are the two big things to watch for. And we're definitely going to hit on those in just a second. But Mike, like when I'm sitting here looking at the markets, it's pretty good to see there was a good resistance in the short term around 507. SPY is now up around that 509, 510 resistance heading into Monday morning. And with these big earnings coming out, we're probably going to see a lot of good fun here coming this weekend. So let's go ahead and see what we're looking at. You named quite a few already, but even Monday, SoFi will be reporting along with Domino's Pizza. I've heard a lot of people talking about Domino's Pizza a lot lately, Mike. I don't know what's up with that one. PayPal Tuesday, 3M, McDonald's, Coca-Cola, Starbucks even, SMCI, one of the most volatile stocks in the market lately, AMD. So we're seeing a lot of these big stocks reporting at the beginning of the week. At the end, it gets even bigger with Apple and DraftKings and Moderna, Peloton, like you mentioned. So there's quite a bit on the radar, and that's going to be one of the big focuses and one of the main leaders of the price action.
All right, Tom, we have quite the selection ahead of us this week. So pick one stock that you're going to focus in on or be most excited for earnings.
All right, Mike. I think it's going to be Kraft Heinz this time. No. Can't do that this week. There's too many out here. Honestly, I'm going SMCI. I think that's going to be an extremely interesting report, and I'm actually kind of tying it with AMD. I really like Tuesday and after hours with those two. It'll be huge for the chip sector there, and even Qualcomm Wednesday, but I'm mainly the chip stocks in my opinion.
Sounds good. So I am going to be very curious to see how Coinbase does after market on Thursday, but I'm going to have to say my number one pick will be DraftKings. I love this stock for the long term, and I don't really care too much what it does like for this earnings report, but I'm very curious to see like what type of numbers they are set to put up in terms of just growth and profitability and everything like that. So I'm definitely looking forward to that report, and regardless, we do have quite an exciting week. Amazon set to report after the bell on Tuesday, which will have a big impact on the market. And of course, we have Apple after close on Thursday. So we have quite the exciting week ahead of us. And as you mentioned with Microsoft and Google exploding up last week, let's not forget it wasn't all sunshine and rainbows because Meta took quite the hit on Wednesday.
Yeah, they really did. That was like one of the big outliers last week. We saw Google and Microsoft do so well. Meta was the one that really tumbled off there. And, I'm kind of worried that Apple might not have the best report either. I think Amazon might do a little bit better, but I know Apple's seen a lot of negativity in the short term. And, they've been talking about sales starting to slow and stuff. So that's going to be a big report here this week to see if Apple will kind of start to get that powerhouse momentum back on the chart. Going out to the daily, they're actually pretty far off their all-time high. From the all-time high to where they are now, they're down around 15%. And at the low, it was like 17, almost 18%. So that's a pretty big drop by such a powerhouse stock like Apple. That's going to be a big one this week. Whereas like we switch to something like Amazon, it hasn't dipped that much. It's a lot closer to the all-time high than Apple is, that's for sure.
No doubt. And then like another thing to keep in mind is like in the same way Meta fell on earnings, they actually had like pretty good like fundamental data, and you could say the same thing with Netflix. So what's worth keeping in mind when we look at some of these big tech stocks is they can report good earnings in fall, and they could also report bad earnings in rise, and a lot of that has to do with just valuation and just like guidance going forward. So earnings is always crazy, and it's a lot smarter to play the move after the fact, but either way, be ready for some extra volatility. And when you have big tech stocks set to report to this extent, that has a pretty big impact on the market itself, because when you have these multi-trillion-dollar companies moving up or down by 10%, clearly that shifts the market in a big way. So you can see this week is actually set to be the biggest week of the entire earnings season. So keep that in mind. And with that being said, Tom, what are some key levels to watch for SPY for the week?
Yeah, SPY's at some pretty crucial levels here. So on Friday, they had a good break. I really like breaking out above 507. I'm definitely going to be using that as a pretty good support here for this week. So I really want to see this like 506, 507 range hold. As long as that holds and we keep pushing up at that, and it keeps pushing and putting pressure on the high of day, then I think SPY will be looking pretty good. As far as resistance to the upside, 509 to 510 is huge, and that's pretty much the high of day on Friday. So that'll be a big area to break. And once that breaks, I think there's a pretty clear push up to like 511.40 to 512. So that's the main levels I'm looking at for tomorrow. Above 512, 514, 515 is pretty big resistance. So there's like a little 2-point range right there. But yeah, it's looking pretty good, Mike. With the way it moved up Friday, the way it closed pretty high. I really like the price action here heading into this week. But of course, that can all change. Like you said, these earnings are nuts. Sometimes the companies report bad numbers and they're still going up.
Yep. All right. And then we can't forget about Jerome Powell coming back this week with an interest rate decision. So on Wednesday at 2 p.m. Eastern time is when we will have the next interest rate decision. And there's currently like a 97.6% chance of rates staying exactly where they are. And 30 minutes after that, so at 2:30 p.m. Eastern time, Jerome Powell will give his press conference. But what I thought is pretty interesting is that we are now only set for one rate cut this year, and that is expected to come in around like the end of September, and even that's not a given. So I think it's pretty crazy, because when we started off this year, everyone was pricing in like 6 rate cuts, and now we're here with maybe getting one.
Yeah, what's going on, Mike? It's almost like the transitory days, remember? The Federal Reserve's doing their job. They're getting out here, they're playing people, they're slow playing it, and at the end of the day, they're getting they're getting the job done, just maybe not in the way people thought and people hoped for, right? But hey, the markets are doing pretty good at the end of the day. We go look at the SPY, we go look at multiple stocks. They're actually pretty good right now, pretty close to highs, and as we know, a couple months ago, hitting new all-time highs. So, it's been kind of good for the stock market. But then again, we've been seeing that inflation start to uptick a little bit. So I don't know, Mike. They have a long way to go on this journey of trying to figure out this whole inflation game, right? It's been a long journey, and I don't know. I think we're getting to a point where we're about to see a pretty big move here.
Yeah, so the Federal Reserve definitely played everyone with the rate cut expectations this year, but the market is, right at all-time highs. You have multi-trillion-dollar companies like Google ripping to the upside in a major way. You still have stocks doing pretty good, so it's like, to be honest, there's really no reason to do another rate cut right now. It's just not really necessary, especially considering that the war against inflation has not been won. So it's like, it's not a bad idea to keep rates where they are right now. So, we'll see how this goes. But as we all know, whenever Jerome Powell speaks, you better listen, because he definitely has a way with words. He moves the market quite a bit in both directions.
He really does. I mean, it's one of the biggest. I would say, Mike, he's probably the most influential person on the stock market, right? I mean,
easily.
Yeah. Yeah, like you can argue maybe there's other people that play a big role too, like Janet Yellen maybe, and obviously Biden, and even people with just a lot of money, like Soros and other people. You can maybe argue stuff like that, but just with a direct impact there, like I think Powell definitely takes the cake. And especially over the past couple of years with all the inflation talks, and ever since the market's kind of gotten out of whack with COVID, it's definitely been like the biggest events have been these Federal Reserve press conferences. So, and the interest rate decision, of course. So definitely be ready when he starts speaking. I'll actually have it live on the Stocked Up Live YouTube channel. You guys should check it out on Wednesday.
Sounds great. And then on Friday, we do have some non-farm payrolls data and the unemployment rate set to release 1 hour before the market opens, but we'll cover that more as the week goes by. So let's get right into some setups and predictions for tomorrow. A stock I'm watching really closely right now is Zoom, and it's to the upside. So this stock has definitely fallen out of the sky over the past couple of years. Of course, everyone was buying this one up back in the COVID days, and it reached highs of around $600 a share, and now it's all the way down to about $62 a share. Even with that being said, they reported record revenue in their last quarter, and overall, they've been holding up in a strong way, but there's definitely lacking the hype factor, you can say, and they don't really have much momentum at all. With that being said, they are bouncing off of a huge support level right around the $60 level, and they're starting to pop off of it in a good way. So Zoom is on my radar to the upside for this week. It doesn't move as crazy as some of these crypto or AI related plays, but it is a relatively strong stock at this current level, but it has to hold that $60 support.
I actually really like that support in the short term, Mike. That's an awesome spot here on the daily, and I love how last week it dipped down a little bit, and it's actually coming up to retest the highs, looking like it might try to run back up quite a bit. So I really like Zoom. It's also bouncing off a trend. One of my favorite stocks in the short term as well. And I know you mentioned DraftKings with their earnings later in the week. I'm actually looking at them for like a pre-earnings run-up here. Or at least maybe not a pre-earnings run-up, mainly just a move for Monday, right? They had some really good candles here in the short term, and DraftKings is a stock that they can go on a pretty good like multi-day runner like they have in the past. So I'm definitely going to watch this one for another breakout come Monday morning. They had a lot of good momentum on Friday, especially right when the market opened. They really broke that high. So if we see that type of momentum come in Monday, then I'll continue to look at calls.
All right, sounds good. Another stock I'm watching pretty closely right now is Fiverr, FVRR. This stock is another one that is definitely bouncing off support and starting to show some recent strength. It had a pretty good day on Friday as it popped up by almost 4% and just had some pretty good price action all day long. So it's definitely towards the top of my watch list for this week in a bullish way. I would love to see it break above like that $21 resistance and make a move higher.
Yeah, this one looks pretty hot in the short term. I also like the support on this one, Mike. I've been liking a lot of these dips lately, and some of them are starting to get bought up here pretty well in the short term. But I know one that has been pretty wild in the short term, and that's going to be Tesla. It's been getting bought up, though, since earnings have happened, and I'm actually watching a pretty key support here on the chart. I really like this 166, 167 support. If we continue to hold this into this week, I will look for a good breakout back above 170 and 173. Start to look at some good momentum back to the upside. There's a couple resistances there to watch. Like if you do see good momentum Monday morning, you got to be careful of that like 172 and 173 resistance. But going out to the book map on this one, that 165, 166 support is pretty strong. So I'm going to really watch that support. If it gives out, I might even look at Tesla down. But in the short term, it's holding that support pretty well. And with the earnings, at least with the earnings move being good, I'm not going to call Tesla's earnings that good, but at least the move was good. So I'll keep looking for that momentum.
All righty, sounds good. All right, well, let's get right into today's momentum plays. And with the first one, we have NIO to the upside. And Tom, these Chinese stocks have been moving pretty well lately.
They have, especially the Chinese EV stocks. I don't know what happened to them over the past couple days, but I'm going to be watching NIO to break above $4.55. They're like right at that 450 resistance here. So if they break 455, then look at calls.
All right, with the next one, we have Robinhood to the upside.
At first, I was like, what? Yeah, go ahead and make them break out above $17.95, $18. If they break there, then eye up the calls.
All right, and then with the last one, we have Coinbase for both directions.
COIN been really wild since the Bitcoin halving event. If Coinbase can break above 240, that's a pretty strong resistance from last week, then eye up calls. If it ends up breaking back under 230, then look at puts.
Sounds good. So we have the downside level for puts and we have the upside level for calls for Coinbase. Don't forget about the upside level with Hood and NIO as well. Either way, these three stocks are on watch for potential day trades if and only if they break through the levels Tom listed. We're looking for strong, powerful, consistent price action, and we want to see these stocks break through the levels and continue. So keep them close on watch. But let's jump right into today's $485,000 big money trade of the day. And we are looking at ticker symbol NEM. So this is a gold mining stock, and on Friday, the big money put just under $500,000 into the 45 strike calls that expire on July 19th of 2024. Looking at NEM, the gold mining industry has been doing quite well over the past couple months, especially given that gold prices are right at their record highs. So that's always good to see. But it's also nice to see a big money play where the call options are slightly out of the money and, have a couple months worth of time to them. So overall, I definitely do like this setup, but I'll also say that it can take some time for this one to move. These gold mining stocks are not as crazy as some cryptocurrency, AI, or chip stock. Like, they move in a slower way, which is not necessarily a bad thing, especially in this market. But overall, I'm pretty excited to see how this one turns out. And of course, the way in which gold itself moves will, of course, impact a gold mining company like NEM.
Yeah, it really will here in the short term. And the good news is that a lot of these miners, Mike, I mean, they should be benefiting really well. I like that they had that good move with earnings too. And I'm not surprised to see the big money getting into calls here. It's going to be pretty volatile in the short term, I think, with this one, but I do like it. It's a pretty fun play, and it doesn't have too much time. I think it's just perfect here with like a couple months till expiration. So I'm definitely going to keep my eyes on NEM. Looking at gold overall, like going to the GLD daily chart, it did start to dip recently, but that doesn't necessarily mean the fight's over with gold. There's been a lot of dips on the way up, and I'm sure that with how high gold has gotten in the short term, a dip was coming. So I'm very curious to see, though, how these miners hold, because let's say gold dips a little bit. I mean, the miners are still benefiting from gold staying fairly high, so that's still a good thing.
Exactly, and I think that's kind of why NEM had such a nice move, over like the past couple months and the past couple weeks, because they definitely have a lot to gain from increased gold prices, but at the same time, the higher the better. So we'll see what happens with this one, but it is a little bit more of a slower moving stock. But looking at the market right now, we are still close to all-time highs, and we have a crazy week ahead of us, especially given earnings and Powell. No matter what happens, the most important thing will to remain adaptable. Last week, we saw big moves to the downside from stocks like Meta, but we also saw a lot of big moves to the upside from stocks like Google, Microsoft, and others. The most important thing is to remain adaptable and, just follow the money, right? It's as simple as that. Some days the market will pop up in a big way, and other days it'll fall. But, adapting to those flows and always making sure that no matter what happens, your risk is managed is, some of the traits that, some of the best traders out there have. So let's remain adaptable. Let's keep those stop losses in place. Let's follow the money, and let's have a great week.
Yeah, manage those accounts correctly. It's very difficult for a lot of people to handle their emotions correctly, but guys, if you keep your risk tight, if you keep your overall account risk semi-low, you shouldn't get too emotional on the plays. You should be able to set them up, keep your stop losses there, and just let it play out. Set your targets and etc. And let the market play it out from there. But let's go. It's going to be a big week, Mike, and like you said, the main focus is going to be adaptability, especially with these earnings, because they're all over the place. Like you mentioned, we have Meta here falling, but then Tesla and Microsoft and Google are starting to explode. Who knows? We'll probably see AMD die off this week while SMCI explodes. There's going to be a lot of different moves out there. So definitely be adaptable, follow the money, and let's make it a good week and just keep that risk low this week. There's going to be a lot of crazy moves between Powell and the earnings. So keep that in mind. There'll probably be more increased volatility than usual.
While this week is the biggest week of the entire earnings season, that doesn't mean to trade all of these big reports. A lot of times, trading the move after the report makes for a much less risky trade with oftentimes even more opportunity, depending on how you set it up. So keep that in mind. Let's trade in a disciplined and smart way. And then last but not least, as you know, with earnings season, sometimes you can have stocks go up off of bad fundamental data, and you can have stocks go down off of good earnings data. So that's why we made the Deep Value Club. We don't really talk about this too much, and it's super underrated, but essentially what we do here is we break down all of the boring fundamental concepts of the stock market, like, a stock's profitability and revenue growth and earnings expectations going forward, and make it into an easy to understand way where it's like you could actually make sense of the data in like a tradable way. We made it super affordable for everyone at $30 a month, and I have not seen one person who signed up for this say that they haven't learned something. So I definitely recommend it. Again, we don't really talk about this too much, but I would say it's one of the most underrated stocked up programs, and we made it affordable for everyone. So I definitely recommend checking out, especially given it is earnings season, so it would kind of be more useful now than ever before. It'll be that first link in the description in the comments down below. But besides that, thank you all so much for watching, and let's make this week a great one.